Good afternoon, you're watching Midcap Radar on CNBC-TV18. I'm Hormuz Fatakia, and well, the markets are showing no signs of respite whatsoever. The Nifty now down 250 points, the Midcap index is down another 1,000 points, and the Rupee is tumbling to yet another record low. But before we get to more details on the show, these are the headlines that we are tracking at 1:30 this afternoon. No relief in sight for Indian equities as the Nifty drops for the fourth day in a row. The broader market pain continues. The Midcap index is now down 8% since the 3rd of January. The rupee's fall intensifies as it falls to 86.57 and is set for its biggest single-day fall in 2 years. The rupee's fall compared to the dollar is the biggest among all currencies globally. The Nifty Realty Index is the top sectoral loser with losses of close to 5% among all 10 constituents are down between 4 to 8%. The index is now down 20% from its peak on the 18th of June last year. PB Fintech shares are down over 7% as well after Morgan Stanley downgraded the stock to an underweight rating. The stock is down for the 6th day in a row, correcting 20% during this period. And among the few stocks that are bucking the trend today, BSE is trading with gains after Goldman Sachs initiated coverage with a neutral rating, saying that the stock is priced to perfection. Well, the Nifty now below 23,200 and convincingly at that. But the story of the hour, though, is the rupee, and that continues to tumble to new lows after another 86.57 was the intraday low that the currency made. It's set for its biggest single-day drop in 2 years now. 86.54 is where the currency currently stands as compared to the US dollar. We'll get to that in just a bit. We'll have an expert decoding the moves as well for the rupee, but Vamakshi is here to decode all the mid-cap movers that are buzzing in today's session. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. Mid-caps are tumbling in the session today. Let's look at some of the top losers today. Blue Star is down nearly 8%. Phoenix Mills is another counter that is down and out in trade today. RVNL, in fact, touched a 7-month low intraday. Kalyan Jewellers is also down 7%, and they too have hit a 4-month low intraday. Real estate stocks are also down and out in trade today. Look at Brigade Enterprises. That stock is down nearly 6%. Sobha, Signature Global, and Godrej Properties are some of the other counters that are down nearly 4 to 5% in trade today. Some stocks also reacting to their numbers. Just Dial is down nearly 8%. PCBL also reporting its numbers over the weekend, and that stock has tumbled over 8%. Equinox India is another counter that is down and out nearly 4% in trade today. Apart from that, several stocks have declined in trade on the back of very strong volumes as well. That includes Adani Wilmar. Keep in mind that the promoter Adani Commodities will be exercising their oversubscription option in the OFS. The stock is down nearly 6%. Syngene is another counter that is down nearly 5%. CG Power and in Inox India also down and out in trade today. But on the flip side, there are some stocks that are gaining momentum in trade today, and that includes Piramal Pharma. That stock is up nearly 6%. AstraZeneca is another counter that is up nearly 3.5%. Aditya Birla Capital, BSE on the back of that note from Goldman Sachs is up nearly 2%. And Biocon, there's a positive news development out there, and resultantly, even in such a weak market, the stock is up nearly 1.4%.
Take that point entirely. Vamakshi, thank you so much for laying out some of those few gainers and a lot of losers in today's trading session. If you can add to that list, you have Zentech, which is down 9%, Gopal Snacks down about 10%, Phoenix Mills down about 8.5%. And also, some of these, gains are being taken off where profits were made earlier. So pull up something like a Swiggy, down about 4.5% on that name. Cartrade Tech, another, stock which is nearly doubled in the last 12 months or so, currently down about 7.5%. And we are seeing some, decline in a couple of these defense names, RVNL, Bharat Dynamics, and the others where weakness continues. But the weakness, none more than what's taking place in the rupee right now. The rupee is broken past that 86.5 mark. 86.54 is where we are. We have Jayesh Mehta joining in from DSP Finance, who's the Vice Chairman and CEO. Jayesh, what we are given to understand is that past 86.5, there was a lot of stop losses that were triggered, and as a result of which there has been incremental selling thereafter. Could you confirm that? And also at the same time, if you could give us a sense of what the counterparty, which is the RBI, doing in the market right now. Do you see any sort of support coming in the very near future?
Hi. So don't know about much of the stop loss, right? But then at least exporters are completely frozen. They're not selling. There has been some selling, which we heard from National Bank, Central Bank, on the both onshore offshore market, but it's been very tepid, not so dramatical, and I don't think so. As of right now, people are testing all levels, and but more than testing all levels, it's more to do about US. We have to wait. It is going to be like this till 20th, and maybe a week later, post 20th of January.
Jayesh, good afternoon. Thank you for joining in. So, do you attribute that solely to what is happening in the US, the strengthening of the dollar, the rise in the treasury yields over there? And post the 20th, do you see a reversal back to levels of 85.5 from where the depreciation started? Or do you believe that this is likely to be the new normal range now for the rupee?
So I think it's more to do with the FPI equity flow. All right, it's not only India, but everything is now focused on U.S. assets. Everybody is withdrawing from everywhere and going towards U.S. assets, and we have seen that numbers in last 4 or 5 months. Right, it's a continuously one-way sell by FPI. The good part for them and bad part for us is. Unlike a lot of other markets in the world, we had the most stable, most liquid equity market because of the flows with the local funds and all that. They could get good exit on the share prices, as well as they got good exit on the currency, right? So the depth was kind of maintained. So both put together, good for them, they got good exit. Bad for us, yes, we gave them exit. But having said that, unless that flow comes back, I don't really see that thing dramatically changing. And I don't think we will know, at least not before mid-February, whether, from U.S., it's not going to be only India. It's whether it is going to, that the only U.S. markets story is going to get spread over and maybe emerging market, because it cannot one way continue that only U.S. market works and other markets in the world works, right? So at some point of time, it has to reverse. We don't know what is that point of time. Right?
All right, we take that point, but we don't know what that point in time is. But do you have any levels on the rupee which you believe would be attractive for those who are looking to enter?
Nobody. Earlier, people thought maybe 86 up, 87, but the way right now, it's more like a wave, right? So, in that wave, I think people will not look at absolute number. I would say they would look at where it will stabilize, and then just like our equity market, right, where it stabilizes, I would rather pay 10% more rather than, fishing the bottom, right? So that's the way here. It's also let it stabilize, let the flow change, right? Nothing is changing right now. Immediately, it's just a hope that at some point of time, people will say that 70% market cap for US may not be justified with 30% GDP growth, right? So of the 30% share in the GDP.
Right.
So at some point of time, it will happen. Right.
Right. So when that happens, if you could give us, what would be the earliest indicator of a reversal coming for those to be prepared?
I really don't know. Maybe if the equity guys would be better able to. But I think when that happens, it will be a little bit sell-off in US, and that could also create some more pain globally to all world markets, right? But and then after that, maybe the emerging market and other markets may pick up better. But we don't know when that happens, and it's genuinely anybody's guess, right? That's why I'm saying whether it happen or not, it's more like a hope right now, right?
Indeed. Jayesh, thank you so much for sparing time and joining us today this afternoon to decode the moves in the currency. And yes, it is the story of the hour, right? The depreciation in the rupee. Jayesh Mehta there of DSP Finance. The rupee at 86.50, the dollar nearing 110 now on the dollar index. The mid-cap index now, the Nifty now near 23,150. Midcap index down over 1,000 points. It's red across the screen. We'll get to the markets in just a bit. We'll take a short break for now, but before we do that, it's time for Growth Code, which is an initiative by Grow and CNBC-TV18 designed to provide you with valuable trading strategies. And what better time to get that? And CNBC-TV18's Nigel D'Souza sat down with Praful Kulkarni, the founder of Alpha Leo Capital, to understand why is the ability to adapt to market conditions critical for long-term trading success.
Why is the ability to adapt to market conditions critical for long-term trading success.
Market works in cycles, market works in regimes. Certain regimes work for certain trading styles and certain regimes are not so conducive for one particular trading style. So once you identify the regime, that kind of determines your stance for that particular regime. That is, every trader has a period of going very aggressive with his approach versus he'll be forced to being defensive in his approach. So when the regime is conducive to your particular trading style, the trader has to push on the gas and he has to go aggressive. And once he determines that, oh, this regime is not completely conducive for my trading style, he has to focus more on not giving up the money that he has made in the regimes which were conducive to his style. So this kind of determines the profitability and ensures the sustainability in the long term. Because market gives opportunity to every kind of trader at least few months in a year.
You're watching us here on Midcap Radar. Let's talk about the primary market right now. We do have, Laxmi Dental's near 700 crore rupee IPO opening for subscription today. To talk about the growth and, the company's outlook from here on, interesting business where they make dental aligners. Rajesh Khakkar, who's the chairman and whole-time director, along with Sameer Merchant, who's the MD and CEO of the company, joined in today. Gentlemen, thank you so much for joining us in our studio. I noticed both of you all have twinned on this occasion. But I'm just curious to know about the objects of the issue, largely because 700 crore rupee IPO, the revenues that you're doing are just shy of 200 crores in the previous year.
Correct.
Of this 700 crore, 138 crore is fresh.
Absolutely.
And the debt on your books isn't too much versus the kind of money that you guys are raising. So what is it that you are going to do with that money? And on that, what could the return on assets be if it is for, adding some capex?
See, so out of the 138, 68 is going towards capex, where we will invest in the existing plant to upgrade the machinery, add automation, add digitization. In fact, we tell people that dentists are making those physical impressions right now. We are leading a lot in digital. So instead of making a physical impression, you can use a dental scanner and scan the impression. So we're leading that kind of automation. And with those, in the past, we have had a 5x asset turn. And, we will keep growing moving forward in a similar way.
So hanging there, for 70 crore, near 70 crore capex, past asset turn has been 5x. Assuming that continues, you are talking about a 350 crore revenue potential from this capex here. That's nearly 60-70% more than what you've done in FY24 itself.
Again, see, the potential is so high because if you see in terms of awareness in the dental category today, 5 years back and, as today, the awareness is tremendously increasing. And we have a great product range. So we start from pediatric to the teen aligners, to the caps and crowns, to the senior citizen with dentures. So we are spread across all category of dentistry. In fact, we say that if there are teeth, we are in business.
Gentlemen, good afternoon. Thank you for joining in. You spoke about the fact that you guys are in 3 different product verticals, right? If you could explain to us the product mix, which is among the top contributing businesses, and the margin profile of each of them as well.
Sure. So currently, the first business that was started, by Rajesh Bhai was the dental lab business, where we make those caps and crowns. And if you go to a dentist, they make a crown for you, do a root canal, and they will make an impression. Then
don't remind us of root canals.
No, the cap on top is where we come in. So that was the first business, and then we started the aligner business and then the pediatric business. So the lab business is about 15%, the aligner is about 26%, and the pediatric is about 55%. That's how the profile is right now.
And the margin?
And the margin bit?
Yeah, similarly, 15% margin in terms of EBITDA margin, 26% and 55%.
No, that's the contribution to EBITDA. We're talking about
blended margin. So blended, H1 is about 24%.
Yeah, so of which, if you could give us a margin breakdown of all these 3 verticals.
Yeah, so that's what I said. In that, the dental laboratory segment, which today is at 73 crores approximately, that's the dental laboratory, and the aligner business is at 37 crores. The dental laboratory has 15%, the aligner has 26%.
All right.
So what explains the jump in margins also? Because you had around 12% margins in FY24 at 19. And do you expect this trajectory to continue? And for your higher margin businesses, would you be focusing on those, if I assume, going forward as well?
I think the focus will be more universal because there is, again, so we believe that one question was on the margin that the 2-year impact that we had in 21-22 was more due to COVID. Because when COVID hit, I'm sure the last thing anyone wanted to go is to visit a dentist, remove the mask and get dental treatment done. But the industry has come back overall globally. So that's how it is growing. And in terms of potential, we believe there is tremendous growth opportunity. There are companies across the world, say in US, in Europe, who have been phenomenal. And, we see usually that what happens there will happen here in some point in time. And the growth part, Rajbhai has a great sentence. Maybe you'd like to
always say इसके 140 करोड़ की आबादी 32 दांत.
That's the time, but a lot of people, 140 में कई सारे, there are people who don't have teeth as well. Let's
we can
not
give them
talk about
dentures.
that. Okay, we'll talk about that. But if you could give us a sense of your revenue mix, how much comes in from domestic, how much comes in from exports, what is that mix likely to change? Because as we look in the domestic market, whenever we go to dentists, I hope we don't have to very often, is that the doctor asks us, this is an imported product, this is an Indian product. So is there that import substitution opportunity here? How does that plan change?
So on the dentist part, when you ask this question, our import and export mix is, so 35% of our business is export, 65% is India.
Got it.
In that, when you go to a dentist, when they're talking of usually import, there are multiple categories. So you'll have to understand dental. When they say import is the dental implant which goes inside the bone. We are not in that category. But when they say caps and crowns, that is only in India. You do not import caps and crowns from outside of India.
So who are the large players? Who are your competitors? And what kind of market share in the organized industry do you have right now?
So again, it is very unorganized. If you see 95-98% is unorganized, and we doing this, and there are CDSCO which has come in. So hopefully the industry will get organized, and that's the whole point here. That if it gets organized, the benefit is to the end patient, because you will know what goes inside your mouth. Currently, the answer is you don't know.
So the product mix remains, the import to export ratio remains the same at 65-35. I mean,
historically it's been similar, because I think both markets have a great time. We are present in both markets across the world. US, UK is one of our top markets. So we believe that this trend has been there since last 3 to 5 years.
And
so the patient in UK and USA, they are getting the crown and bridges, which is made in India.
Got it. And in India, who would your competitors be? And what's your moat against those competitors?
Like I said, unorganized. Majority, is unorganized. And our
larger
moat is, in terms of larger players, again, there may be smaller regional players as such, but we are a pan-India global dental products player. So with that, we see a moat is, in terms of quality, we are really focusing that have the first US FDA 510K listing, having all the certifications that are needed, putting investment in digitization. So we have 160 scanners which are spread across India to give scan as a service. And those are a lot of things that we are doing to make sure that when you receive a product from a dental company, it should be safe.
Okay, so from the current market potential itself, let's say India has 100 dentists, right?
Yes.
How many of them are, you supplying to right now? How many are you intending to increase in terms of your reach? And what is the typical margin that you give to dentists for recommending or selling your product? Or what's in it for the dentist? Because at the end of the day, while we're consumers, the business is a B to B to G or B to B to C,
correct,
right? So those guys in the middle have to make some money. What's your, sort of cost to acquire a new dentist, and what's your plan here?
So again, we, in India, there are about 2 lakh dental clinics. We have about 22,000 dentists who are working with us. Out of them, 90% is from India, 10% is from outside of India. In that profile, again, it depends when you ask a question in terms of a product. There are so many SKUs. As a patient, when you go in, there are like 50, 100 options. And the dentists are the people who decide what fits you the best, and then based on that, prescribe to us.
Or what gives them the bigger margin, and then put that.
No, I think Indian dentists,
they are the best they are one of the best dentists in the world, and whatever best for the patient, they always recommend.
Indian dentists are best in the world because we believe that as Indians, we do not treat a patient just by a number, but we also have more emotions attached to the patient as well.
Sure, we would not want to validate that by visiting dentists ourselves. But gentlemen, thank you so much for sparing time and joining us today. Wish you good luck for the issue as well.
Thank you so
and
much.
hoping to get connected again once on your listing.
Sure, sure. Thank you so much.
Good luck for the equity markets. Your company is called Laxmi Dental. Maybe you smile your way with Laxmi as well. So we'll keep an eye out on all of that. That was the management of Laxmi Dental, the issue that is coming up. Meanwhile, while this conversation was going on, there was the update that came in from Puravankara. So pull up Puravankara stock. There has been a big decline in the Puravankara share price, down about 6.5–7% right now. We need to try and understand how much of that was on account of the third quarter update and how much of that was the general weakness that we're seeing in the real estate pack itself. Puravankara down nearly 7%. Take a short break, come back, get you more on the markets. Yes, pre-sales up 2%. So that's a softer number that is compared to all the others that have reported their numbers so far. Collections up just about 6% and that reflects the increased weakness that we've seen on Puravankara. Take a short break, come back, focus on the markets, get you a lot more.
Welcome back. 300 points down now on the Nifty, nearing critical levels of 23,100 now on the index. And speaking of the index, Sudarshan has come up with some very interesting data on Maruti Suzuki, and that is with regards to its sales numbers. Sudarshan.
So in this falling market, something positive that I would like to talk about, it's on Maruti Suzuki. And as per Vahan data for first 12 days, its sales have already crossed 1 lakh units. So there are two questions. First, will Maruti's retail sales in January 2025 cross 2 lakh units, and will January 2025 be the strongest January that company has ever seen? Just look at the data. In the first 12 days, Maruti has done 84% of total sales that company has done in December 2024 and 60% of what company did in January 2024. In comparison, Mahindra M&M and Hyundai sales are largely in line with what these companies have done in January 2024. For example, M&M's data for Jan 1 to 12 of this year, it has done 56% of total sales that it has done in December 2024 and 47% of what company has done in January 2024. Similarly, for Hyundai, it has done 70% of total sales that it has seen in December 2024 and 53% of what company did in January 2024. Historically also, sales for Maruti in the month of January are largely have always been strong. Now talking about the overall PV sales, and there we can compare like to like. So for this year, from Jan 1 to Jan 12, total PV sales as of now are at 2.55 lakh units against 2.40 lakh units that industry saw same period last year. So it's up 6%. Now the question is, does the momentum that the industry sees in the first half of the January continue in the second half? Historical data suggests yes, it does continue. So for example, look at 2024 data. In the first half, total sales were at 2.40, and in the latter part of the remaining 2 weeks, total PV sales were at 2.64 lakh units. So obviously sales have jumped. Now we'll have to see in the remaining part of the month that if Maruti manages to cross the retail sales of 2 lakh units, and if we manage to see the strongest ever month for the company.
Indeed, and we look forward to those numbers from Maruti. Sudarshan, thanks a lot for that. But with that, it's a wrap on this edition of Midcap Radar. We leave you with the index down 310 points, the Sensex down 900 points, but the more significant pain is in the broader markets, the mid-cap and the small-cap indices that continue to bleed, and the story of the hour is the fall in the rupee. Take your leave on this edition of Midcap Radar, your stocks for the next 30 minutes.